Good evening, everyone. Good evening, everyone, and thank you for waiting. Welcome to Blockchain and Crypto Adoption, the New Normal in African Fintech. I am Benazia Saidu, CEO of the Mauritius Africa Fintech Hub, and I'll be your moderator for tonight's session. We're thrilled to have participants and speakers from across the continent and beyond joining us. And before we dive in, let me set the stage here on our theme of the day. This webinar is the very first session of the series Unlocking Africa's FinTech Potential Through Digital Leadership, jointly presented by the United Nations Economic Commission for Africa, also known as UNECA, and the 10x1000 Tech for Inclusion Initiative, a global program empowering digital leaders to drive inclusive growth, both co-organizing this initiative here for the Africa FinTech Network. So tonight we'll explore how blockchain and crypto are reshaping Africa's FinTech landscape, from driving financial inclusion to navigating regulatory complexities and driving financial inclusion. This is not just a conversation about technology, it's about economic empowerment, access, and Africa's digital future. Thank you again to all those who have registered and joining us. We encourage you to make the most of this initiative. Drop us your questions in the chat or the Q&A feature on Zoom here, which we'll go through at the end of the presentations. To open our discussion, we're honored to welcome Dr. Maktar Sek, Chief of Emerging and Frontier Technologies at the UN Economic Commission for Africa, with opening remarks. Dr. Sek, the floor is yours. You are on mute. If you can unmute.
Okay.
Thank you.
I think it's okay
Dr.
now.
Sek.
Okay. Thank you very much, Ms. Saidu, for moderating this session. And good morning, good afternoon, where you are. It is a great pleasure to have you today, all to discuss about an important subject for the continent. When you talk about fintech, let me check if my camera also is on. Okay. Thank you for being here today and for joining us in this Africa FinTech webinar. We organized together with our partner 10x1000 and also Africa FinTech Network to discuss how we can develop FinTech across the continent. Let me start by saying Africa FinTech sector is growing rapidly. We forecast suggesting it could be 13 times larger by 2030. It means there is a potential rivaling the Asia Pacific market. I'm sure my colleague from Alibaba will agree with me. This progress also endured despite regulatory and infrastructure hurdles, reflecting the continent's strong innovation and resilience. As you know, we have a lot of challenges across the continent. I will come later on this. But what is driving this transformation of our fintech across the continent? First and foremost, this is a mobile money as revolutionized financial service access for million previously excluded from the formal banking. As of 2024, Africa hosts around 178 mobile money service, translated in 1 billion registered accounts, means it is an increase of 19% and 1.1 trillion transaction, accounting for 2/3 of the world mobile value. The fact is that Africa is moving fast on mobile money. The use of cryptocurrency also has increased in Africa. For instance, Sub-Saharan Africa recording a 52% rise in crypto transaction between July 24 and June 25. And this, it is a total of $205 billion. But this growth is also associated with factors such as inflation, currency volatility, and interest in expanding financial inclusion. Digital currency are being adopted as an alternative to traditional banking by some individuals. Another key factor, critical factor, is capacity building. We have several initiatives on capacity building program across the continent. This digital service financing of excellence and innovation platform across the continent. I give like this Smart Boss Lab. PCA is developing in Botswana, is cultivating digital finance skills, facilitating knowledge exchange, and providing safe environments. For information, we are developing now some use case on sandbox use case on fintech in Botswana to show how we can improve better the financial fintech sector across this country. And this initiative get duplicated in several countries in the region. Fintech started also addressing issues regarding financial inclusion. That's to pay. But some digital platform and alternative data analytic companies such as M-Pesa and Cheaper Cash provide financial service outside of traditional banking system. And actually, we have applications like Ala, Branch, and Carbon use alternative credit scoring model of micro loan, which can enhance opportunity for individual and especially within sectors like e-commerce and agriculture. The use of technology such as AI and blockchain also is contributing to improve credit access and participation of the digital economy. Regulatory sandbox I talk about this is increasingly important in Africa. We have, as of today, over 25 programs in 15 countries, such as Kenya, South Africa, Mauritius. And this framework led fintech innovation and the regulatory oversight to ensure compliance and asset risk. For instance, Nigeria Central Bank used also this sandbox for financial inclusion. Why we are talking with Mauritius on blockchain development? I think Benazir can talk about more on this. With this positive development in the continent, and this market, we are facing several challenges to impact the development of fintechs in the continent. The regulatory, it is one of the key challenges. Only 18 countries have comprehensive fintech regulatory by end of 2024. It is very low compared to 55 countries of the continent. Infrastructure gap also, it is a big challenge with only 38% of our population connected. And they have regular, and also 50% penetration below the normal range. And why this digital infrastructure gap is very important to cover all the African countries to make sure fintech applications are available everywhere in African country. Cybersecurity and data privacy also is as a concern for the continent because we operated in a very sensitive sector.
Dr. Sek, I'm sorry to interrupt you, but it sounds like some of our attendees cannot hear you correctly. Could you please get closer to your laptop and maybe speak a bit louder? Thank you.
Because
that's better, much better. Thank you.
It's much better. Okay. Now, cybersecurity, although it is and data privacy, it is one of the concern for the challenge for the fintech. For example, in 2025, Interpol report that we have is 300 million online investment fraud in Zambia and 7 million lost by Nigeria Fintech free to wave. This highlighting the urgent need for robust security measure. I think it's very important, this issue of cybersecurity. Financial literacy also, it is a digital literacy gap. Also, it is a very important challenge for the continent, as less than 32% of adults are financially literate. It is very low. Access funding also for the startup, fintech startup, is very low. We have only good example in Nigeria, South Africa, Kenya, and Egypt mobilize a lot of investment in the fintech sector. And to overcome to this challenge, ECA is doing a lot of to support this fintech. We develop also this African digital transformation strategy. Also, in 2019, we launched the African Fintech Network to serve as a platform for collaboration, knowledge sharing, and partnership between with the aim of expanding fintech solution and promoting a more integrated digital economy. ECA also developed a report to optimize the taxation in the ICT sector. And this report demonstrated how reduced tax can improve access to digital technology to promote financial inclusion and drive this digital transformation. Also, to develop this fintech across the sector, we need to identify people. Why ECA is conducted a program on digital ID to support African country. A lot of countries now have benefits for this program, like Ethiopia, Malawi, Gambia, and others. And this help to establish reliable digital identity necessary for effective fintech regulation. ECA also is involved in the cross-border payment initiative by working on reform in payment system, regulation, and infrastructure, and to support also the African free trade area. Our contribution to the projects like this Pan-African payment and settlement system payment settlement system is one of the key steps we can highlight today. Also, we have a joint report with African NENDA and World Bank on the state of instant and payment system across the continent. It is a yearly report, and the report for 2025 will be launched soon in the course of September. This report provides comprehensive regulatory guidance and also the role of central and framework for inclusive payment. For closing this Africa FinTech journey, it is a story of innovation, resilience, and collaboration. We need to build on our accomplishment. Lots of things has been done in this fintech sector. We need to strengthen our partnership, also fostering and regulation to support continuous innovation and inclusive growth. With that, we can unlock even greater potential for our continent. Thank you for your attention. I wish you a productive and inspiring meeting, and look forward to seeing the continued impact of African fintech across the globe, and would like to thank all our partners of this webinar. Thank you so much.
Thank you so much, Dr. Sek, for this warm welcome. So we'll head into the presentations now, diving in with our first core segment of tonight's discussion on blockchain technology. To help us understand the fundamentals, the benefits, and real world applications of blockchain in African fintech, we are joined by Mr. Abdallah Mukhaled, Senior Policy Manager for Ripple across the Middle East and Africa. Abdallah has over 14 years of experience in policy and regulation and works closely with governments to support blockchain adoption. Abdallah, the floor is yours.
Thank you very much, Benazir, for the introduction. Thank you, Dr. Mektar, for the warm welcome. I hope everyone can see my slideshow at the moment.
We can see your screen. You may
Perfect.
proceed.
Thank you, Benazir. Yeah, the screen. Perfect. So briefly today, I'll try to sort of highlight some of the opportunities that come with blockchain technology, what the fundamentals of blockchain technology look like, and then highlight some of the sort of emerging use cases, specifically in sub-Saharan Africa, looking at how transformative the technology can be from a financial inclusion perspective, but also beyond financial inclusion. So at Ripple, we believe that blockchain can help move value the way that information moves today. And that's what we're trying to achieve through different efforts. The evolution of digital assets. So digital assets, virtual assets, cryptocurrencies, there's so many names for the same thing. And I think and within the industry, we're a bit guilty of coming up with all these names for the same thing. Effectively, in today's world, there's a lot of digitization of money. With blockchain technology, we're seeing a new asset class, which is attempting to sort of unlock trapped liquidity, improve efficiencies. And the expectations of clients are now for immediate settlement, for immediate access to their finances. For financial institutions, what does that mean? It means that even for existing fintech players that want to interact with blockchain, it means looking at replatforming, understanding that blockchain technology will require an infrastructure change to a certain extent, starting off with custody wallets infrastructure, which is a key starting point for anyone looking into capitalizing on blockchain technology, but also looking at what institutional connectivity can achieve and issuance can actually do for an institution, in the sense that instead of relying on existing crypto assets, issuance can go a long way in helping institutions capitalize on this efficiency. But what are digital assets and tokens in general? I think one thing that often gets mixed up is the difference between digitization and tokenization. Digitization is effectively scanning a paper, putting a CD in MP3 format. It's changing something that's physical into something that's digital. Tokenization at its core, be it any form of token, is meant to create an on-chain single source of truth that allows for programmability through smart contracts that can sort of be effective immediately without the need for human intervention. So allows for a lot more automated models. And then at its core, a token is supposed to be in itself a bearer instrument. Similar to what we've seen with securities historically, it went from paper form to digital form. Our prediction is that more and more assets will become tokenized moving forward. The benefits of that briefly are, again, increased liquidity, and trapped liquidity can be in the form of specific to certain industries, but also specific to certain jurisdictions. And this is super applicable to Africa. Africa has always been a continent of great potential, but liquidity might have been an issue with certain sectors or certain jurisdictions. And with blockchain technology, with the global nature of blockchain technology, we hope that can sort of improve. Blockchain technology brings in operational efficiencies. It makes AML and KYCs a lot easier, despite what perception might be of blockchain technology. The reality of it is through on-chain analytics, it's actually a lot easier for institutions to be able to comply with regulatory requirements. Different types of digital assets exist, and I'm going to sort of speed through some of these sections so that I don't take out of anyone's time. But starting off, there's CBDCs, central bank digital currencies, which are effectively tokens issued by central banks, as their name would suggest, that are a replacement for fiat money, digitized form of fiat money on the blockchain. There's tokenized deposits, which are a claim with a financial institution, usually a bank or a central bank, even for it's an IOU from these institutions, effectively, that's in tokenized form. Stable coins are emerging as a very efficient way of looking at and a key entry point for a lot of institutions looking at capitalizing on blockchain technology. And they are effectively pegged to a fiat currency where a single token represents a single fiat currency. They are a way to be able to capitalize on blockchain technology without getting any exposure to any volatility. Cryptocurrencies are inherently, they don't have any intrinsic value, they don't confer any rights to the owner, but they are asset classes on their own at this day and age. Just look at the value of Bitcoin and we can see where that is going. Security tokens are, again, in this vein of traditional securities. They confer a right similar to what a security would confer to a token holder. There's several ways of tokenizing a security, either natively on chain or through actual mirroring of an existing underlying asset in the form of a security. But these are the things that slowly will unlock more and more efficiency as we move to a more on-chain economy. Asset-backed tokens, primary real-world asset-backed tokens are effectively tokens which again are pegged to a real-world asset. It could be real estate, it could be a commodity like gold. There's a physical asset that's associated with it. And interestingly, we've seen several players within Africa look at tokenizing crops, for example. Soybeans comes up. I don't think specific to Africa, but there's more and more interest in seeing how liquidity can be unlocked through these features. Utility tokens are tokens that are usually specific to certain ledgers, which are or can be associated with a service, and they're not meant to hold any value, but they're meant to unlock access to a service, if that makes sense. And finally, got the NFTs, non-fungible tokens, which are usually representing a digital asset. Historically, it was art, but it could also be numbered gold or what have you. Now, regulatory clarity, and this was touched upon in the opening statement, is key. And we see regulatory clarity as a three-phase journey. It starts off usually with custody. If an institution cannot custody its own assets, it's going to be really tough to be able to get consumers or businesses or institutions in general to be able to benefit from blockchain technology when they don't trust it. It starts off with custody, usually with an ecosystem. The first stage of any regulation is the development of a wider ecosystem that allows for on-ramping, off-ramping from digital assets, looking at institutional infrastructure. Wallet services is a big one. And then slowly it usually transitions into institutions exploring what DeFi and blockchain can do. Stable coins is a key unlocker of that efficiency. And then trends eventually to what is phase three, when we get, and then within phase two, there's also tokenization is something that a lot of regulators are looking at. And then phase three is when we've got a full gambit of on-chain economy from start to finish through digital money in the form of stable coins or tokenized assets that can all exist on-chain, be programmable through smart contracts, and unlock the full efficiency of blockchain technology. Blockchain technology and financial inclusion. What's great about blockchain technology, and this slide demonstrates it very well, is it has not been specific to high-income markets or specific parts of the world. Adoption has been unilateral through high-income countries, lower middle-income countries, and upper middle-income countries. Low-income countries have struggled to adopt as much, mainly because historically there's less access to expendable income, but we've seen that change as blockchain stops being solely for investment, but a tool for efficiency. And we expect that number to grow and more. Right now, we're living in a world where we've got $296 billion in stablecoin market cap. 97% of institutions think that tokenization is going to change the way they do business. We already have around $4 billion of tokenized US Treasuries on chain that are being traded. And a recent BCG report expects that by the year 2033, $19 trillion of assets will, and this is, sorry, other than stable coins, which are in themselves tokenized fiat assets, $19 trillion of real world assets will end up on chain, being traded on chain. Blockchain adoption in Africa. Africa has already been leading adopter of blockchain technology. I think we've got 2 countries within the top 20 adopters of blockchain technology, according to Chainalysis, and those are Nigeria and Ethiopia. Institutional momentum is catching up with what was initially a retail-led momentum. More and more institutions are trying to capitalize on this efficiency, and we see this on the right side graph. Just the activity that just looking at the activity that's being undertaken on chain in Nigeria and South Africa, the overwhelming majority, just short of 60%, has been institutional in nature. I think another thing that's super important is the fact that while the rest of the world was dreaming of digital money, a lot of African countries have already built that. The market is ready for mobile payments. It's just about unlocking more and more efficiencies, and that's where stablecoins come into play. Tokenization. Tokenization is a big opportunity for markets, emerging markets in specific. It helps, again, going back to what I was discussing initially, it helps unlock more liquidity, but that's not only specific to sectors, but to markets. It's the process of representing ownership rights on chain, opening it up to a global market, but also additionally allowing fractionalizing of these assets. It could be an apartment, and we'll get into that, that's being fractionalized, allowing for investors that historically would never have had access to these assets to be able to invest in them. And equally allowing for investors that would have never had visibility over these assets to invest in them to do so. And here is where I'll try to highlight a couple of cases just to show that this is real world. This is something that's happening as we speak. When it comes to our real world asset tokenization, the first use case of actual on-chain tokenization of real estate happened in Dubai this year. It happened on the XRP ledger, but effectively the Dubai Land Department allowed for the tokenization of ready properties on chain, which allowed for fractional ownership. So as little as $500, someone could invest in an apartment. Historically, different vehicles have existed for that, mainly SPVs, but the issue with SPVs has always been that the token owner or the actual investor had very little control over their actual assets. This is what we're able to unlock more with tokens. And then there's also the lower threshold, which allows for access for a wider segment of society. And we've seen this pay dividends. Most properties are selling out within minutes. And then when we start looking at the virtues of a full on-chain economy, one of my favorite use cases to actually highlight is something that Ripple has been able to do through Ripple Impact. Ripple Impact works with Mercy Corps right now on creating, to keep it simple, historically, different NGOs would help in certain conditions when certain environmental hardship exists, help to actually fund some of the affected segments of society. What we've been able to do this year is work with Mercy Corps on creating a stable coin, RLUSD, which is Ripple's USD-backed stable coin, create a USD escrow account on chain with a smart contract that sits next to it that's linked to an oracle that predicts the conditions of certain drought in northern Kenya. Around 500 pastoralists would benefit the minute that the drought conditions are met, because they will be able to the drought will trigger the oracle that will trigger the smart contract and unlock the actual funds that have been held in escrow on chain. And this shows the virtues of being able to hold an entire economic process on chain. This would allow NGOs to reduce transaction costs, delivery time, but not only NGOs, microfinanciers and insurers too. And this is the impact that blockchain technology can have on financial inclusion, lowering costs, speed, transparency, global access. And we've seen this already happen through, maybe not directly through Ripple. We've worked with Mercy Core Ventures to fund several entrepreneurial initiatives in Africa that are geared towards that. We've seen it being applied into insurance. But one of my favorite use cases is a company called Ijara in Francophone Africa that is actually looking into introducing investment opportunities for usually underserved communities, mainly due to income or women or what have you, through blockchain. And one of the best use cases they were able to achieve is tokenize Cameroonian bonds on their platform that were effectively low risk, high yield bonds that people who have historically not been able to invest were able to capitalize on. 46% of the people who invested in these tokens are first-time investors who have never even invested, let alone in similar types of asset classes. And this is why when we talk about blockchain, the transformative nature of blockchain can definitely have a tremendous impact on financial inclusion in Africa and beyond. I've got more slides on regulatory clarity and what's coming in Africa. Dr. Mektar touched on this earlier. There aren't enough countries in Africa right now that do have regulatory clarity to guarantee consumer protection, but there's been early movers. Mauritius, South Africa come to mind, but this year we get Kenya just passed a VASP bill. Nigeria is coming online. The Bank of Ghana has issued regulations. I think the sky is the limit when it comes to blockchain technology in Africa, and hopefully we'll see more and more. I'll stop here. Thank you very much, everyone, for listening.
Thank you, Abdallah, for that comprehensive overview. Allow me to use this time to remind members of our audience that we will be taking some questions at the end. So if you have any questions for Abdallah here or any of our speakers today, please drop your questions and your thoughts in the chat or the Q&A function. On this note, we will now shift our focus to cryptocurrency adoption, a topic that's gaining momentum across Africa. From remittances to mobile payments, crypto is playing an increasingly important role in financial inclusion, but it also brings regulatory and adoption challenges. And to explore this further, we're joined in by Dominic Kapalu, chairman of the Business Regulatory Review Agency in Zambia and a pioneer in crypto education across the region. Dominic, we're excited to hear your insights. And the floor is yours.
Thank you very much, and I'm glad to be here. Let me just start sharing my screen, and I'll be with you shortly. Okay, so let's get to the beginning first. Cryptocurrency adoption, role of cryptocurrency in African fintech. Over the years, African fintech has been improving. Am I audible?
Yes, we can hear you, and we can see your screen.
You can see my screen, right? See, I don't know why it's hanging. Just a minute. Okay, yeah. So over the years, African fintech has been doing very well. We have been moving at a very, very fast pace in terms of improvement. I think like the earlier speaker spoke, is because of we are already used to the idea of mobile money, which is mostly very, very unique to Africa. And we have very few legacy issues like big banking institutions, which are a hindrance for the other countries to move to the next stage of development in terms of fintech. The introduction of cryptocurrencies has had a huge impact on African fintech, because initially, whilst the fintech was developing, we had a bit of problems in terms of remittances and in terms of payments. The problems were mostly in terms of the costs of maybe sending money or maybe transferring value from one person to the other. So the impact for us, especially here in Africa, is mainly felt in the remittances, payments, and financial inclusion. Here, when we talk about financial inclusion, we talk about anybody maybe who has a smartphone. and which is internet enabled, is able to actually get involved in fintech. Suffice to say, the regulatory challenges have had an impact on its quick adoption in some countries, like my country here in Zambia. I think the Bank of Zambia was only talking about this last week that they intend to introduce some regulation in the fintech space, the cryptocurrency and blockchain space. But right now, we also just included this in the syllabus. So I'm seeing that it's only now the knowledge has to increase first before we can actually talk of the physical things being done. That is not to say some people are not involved in this space. A lot of people are actually already doing a lot in the crypto space in terms of education and actual investing in the crypto and blockchain space. Payment systems were a challenge to many fintech platforms before the crypto adoption came on the market. Obviously, we talk about costs and reliability. The cost was a bit expensive in terms of maybe sending money or to actually onboard platforms which we were using as payment systems for the people actually maybe trying to get onto our platforms. But now with the introduction of cryptocurrencies, that became cheaper, quicker, and reliable. It is cheaper in that what we pay in terms of movement of money from one wallet to the other wallet, especially if you are talking of stable coins, which Abdallah was talking about, some of them is, if you are on the same wallet, like if you are both on Binance, it's almost, the cost of sending money is almost zero. Now, you can imagine the benefit which accrues to you if you're actually paying close to nothing for being able to transfer USDT, which is a stable coin, from one person to the other. It's quicker because as the blockchain, on the blockchain, basically a transaction maybe will take to 15 minutes or less for you to be able to transfer resource from one wallet to the other. And this also happens peer-to-peer, meaning the money comes directly to me, to my wallet, without me having to say, okay, now I have to go to the bank to go and actually do a withdrawal of this particular money, which I need. And then as for payments, the amount of bureaucracy and paper needed has been greatly reduced. Going to the bank, I have to fill in a form which maybe gets taken behind. Someone has to look at it, they check and everything, all those processes which we go through. And those processes sometimes take a bit of time before you actually get to have to lay hands on the amount of money you need or the payment which you made to someone. And that is being sorted out with the coming of the blockchain and crypto currencies. So in terms of time, we save a lot of time there. According to a report of April 2024, focusing on sub-Saharan Africa, 51% of the population were unbanked as of 2022. When we're talking about banking, we are talking about the infrastructure that comes with it. Not only the infrastructure, but we're talking of the employees who are needed. So the costs of building this infrastructure and then also maybe to get employees, that is also a hindrance to the fast model in which these banking services can be able to spread. And the bank obviously looks at these areas where they're supposed to go to and see if it will actually be profitable. Compare this to crypto and the blockchain in terms of how you adopt and the cost. Of course, for the person establishing the platform, they have the initial layout costs when they start. But once that is done, it is the platform now which is going to do the rest of the work. So for us who are onboarding, as long as we have a device which is internet enabled, wherever we are able to join in. Cryptocurrencies in countries where internet availability is reasonably normal can rely on the wallets to keep their finances. Yeah, so as compared to what if we're talking about banking services, if there's no banking in the area, that means you have to travel several kilometers, which is another extra cost, apart from the charges which you are going to be charged in the particular bank where you actually hold your account. People can trade, make payments through their mobile phones using cryptocurrencies, and that has changed a lot of how we actually do our business. Regulatory and adoption challenges. Since crypto is new in the market, people have been discouraged because of earlier scams. I'll talk about maybe us here in Zambia. Initially, when cryptocurrencies came, a lot of people lost their money, and that has discouraged a lot of people. Every time you speak about Bitcoin, they ask you, I want to join Bitcoin. You don't join Bitcoin because they confuse the MLMs, which came earlier on, with what we are having now. Like that, the earlier scams have actually discouraged a lot of people to onboard onto crypto and the blockchain, because they think whenever you mention cryptocurrency, you're actually about to scam them. And then lack of coordinated approach between countries' central banks. Of course, I know that central banks have meet at times, but then some countries, like you mentioned, South Africa, Nigeria, Ethiopia, are way ahead of the countries, like some of the countries which have not even started talking about these things. But the reality of the world is we are moving very fast, and then so some countries will lag behind because some countries will be way ahead, and then they will have to start learning from those which are ahead of the pack. Education system in some countries are starting to just grasp the theoretical part of it. Yeah, our country here in Zambia, we just introduced the blockchain into the syllabus. So slowly something is being done, but I think we are not at a stage where we would be very pleased that people will get the knowledge, because this knowledge is not something you pick up very quickly. It takes time to appreciate and learn whatever it is that we are doing. So it will take a bit of time, the theoretical part, before we actually get to the point where people can actually start using it. Taxation issues. As a government, I think there is a bit of revenue being lost, because if we don't have exchanges in our countries, there's no, it's a bit hard to actually tax the citizens who are involved in the crypto market, because most of the times at the point when they're converting their crypto into fiat currency, that's when it's easier to tax them. Otherwise, for as long as their money is on the platform, and especially if those platforms are foreign, then the countries actually are losing out in terms of charging tax. Lack of exchanges, like I've said, is contributing, because most of the exchanges we use, like Binance and all the other exchanges, are not obviously indigenous to our countries. So our countries are also losing out on the charges and the commissions, which normally would be paid by these people who are actually working on those platforms. Then we have the anti-money laundering and the KYC compliance. Those are the issues, again, we are talking about, which need to be looked at by countries. And then security issues, because it's easy sometimes to anonymously send these monies where actually the bank is not able to monitor where these funds are going to. So this also is discouraging many countries from adopting it, because with all the zero knowledge, whatever's coming in now, it will even be harder for the countries to monitor how funds are being moved in the country. Unstable and unreliable internet, that problem is dogging a lot of African countries. Some, of course, are way ahead of the pack, but most of our countries, we have very unreliable internet. We need to maybe move to 5G. Most of us are still on the 4G network, and that also is hindering the advancement. Lack of proper knowledge, and maybe that's where we should concentrate, because that's why a lot of people actually lost a lot of money through scams, because we didn't have the knowledge, and a lot of people didn't have the knowledge. But the difference was, some of the people got scammed, and they got curious, like, okay, if someone is able to scam me who's so many kilometers away from my country, this system then must be able to work, but it's being used wrongly. So that drove them to want to actually get more knowledge and know how is it that someone is able to move money from Zambia to another country. So definitely the system was working, but somebody was actually using it wrongly. Then we have the older generation, who obviously are viewing it with suspicion. Anything new, any change that comes, people don't like change, because they are used to whatever they have been doing for many years. And when something new comes, that means they have to start learning, and most people don't want to start acquiring new knowledge. And then we're talking of lack of legal framework to govern the usage. Yes, like for my country specifically, the only guidance which has been given, like from Bank of Zambia, is this is not regulated in Zambia. So if you get involved, you are getting involved at your own risk. So that doesn't help matters, because the moment that kind of guidance comes from the bank, everybody is thinking, then why would I want to get myself involved in something that even the bank is saying is being done at your own risk? That is the end of my short presentation, and you have my contact details. Thank you very much.
Thank you, Dominic. And for the members of our audience, if you have any questions on crypto adoption or to Dominic here, feel free to use the chat and Q&A to drop your questions. We'll now dive into the topic that's reshaping the landscape of digital finance, which is stablecoin commercialization. We're honored to have Cedar Zhang from Rosen, who will share practical insights into how stablecoins are not just facilitating cross-border payments, but also accelerating crypto adoption across Africa's growing gig economy. Please join me in welcoming Cedar Zhang.
Hello,
Cedar,
everyone. Yeah, hi.
we can
Let me
hear
know if
you.
you can see my screen right now.
We can see your screen as well, and we can hear you.
Okay. Yeah, thanks for having me here today. I know that you've already talking about some like regulations and compliance in Africa for the crypto. And what I'm going to share with you is about the stablecoin application and how it empowered the Africa's gig economy and the future of work. So let's just talk some like real use case. Before I dive into our application and our use case, I want to let you know like how you imagine the future of work, especially under this era for like the emerging technology of the AI and whatever. So I think in the future, every work should be really fragmented and instant and borderless. But are we really ready to embrace such a new era? I think not yet, because there's still a lot of problems that need to be solved. So, for example, blocked by the high cost and slow payments and the language barriers, this actually excluded billions of people, especially those non-English speakers and SMEs or startups in the emerging markets, and also a large population of the unbanked. So this problem actually is more urgent in Africa. So I'm sure that you already know that there's only 34% of people here in Africa are banked. That means there's tens of millions are unbanked. They don't have any access to those traditional finance sectors. And meanwhile, if you look at the workforce reality here in Africa, you will see over 85% of the workforce are in these informal sectors. That means that's not like 9 to 5 classical jobs. This is really like flexible work. And 70% of them are micro earners. That means like their median earnings every month is just like around $6, $6 I mean. So it's not that large number. And you will see that the language barriers is also really important problem here, because there's over 2,000 languages in Africa. People speaking different languages, and there's over 82% of people they don't use English in their professional workspace. So this is something that we should look at. And the bottleneck is here really clear. The micro earnings or micro payments are non-existent here. So that means like if you don't have the access to the micro payments, that means you don't have the opportunities for those micro earners. And you know that they are 70% of the workforce. So they are the majority, but they are underserved. And this is why I really love to share like why Rose and why stablecoin, like how we utilize the stablecoin in a real use case, and how we use that technology to empower a better income generation, a better economy here in Africa. So under the old rules, you can imagine that if you want to do some like cross-border business, you need to learn a foreign language, like English or like maybe Chinese or Spanish or whatever, and then you need to open a international bank accounts, like you can accept the US dollars or any foreign currencies, right? And that means you need to pay a lot of fees, upfront cost, right? Before you do anything, you need to pay that fees, and you need to wait a long time to proceed this kind of transactions. And somehow you will have no access to participate in this global economy. But you just already, paid a lot, and you already dedicate a lot of effort in this kind of process. But the new rules under Rosen, that means you don't have to go through all those complexities, and no upfront fees, no waitings. You just do what you love and you just get paid instantly. This is some scenario that we are building here. And this is our application demo record. So you will see that we use the USD stablecoin so far, and it could make those global tasks valued down to 1 US cent. It's really, really small, like micro payments, and there's no fees at all. And you can get instant, like real-time settlements for all over the world. And our AI can help you to remove those language barriers. That means like they can represent you or help you to deal with the businessmen or those like employees around the world every minute. So Rosen is the solution for sure, and the stablecoins are the bridge. That use that kind of technology, we can unlock 95% of the world populations and SMBs, and we support those global tasks at nano value. That means you will see massive nano or micro opportunities come up on this Rosen app every day or even every minute, and to unleash those suppressed demands for the past decades or thousand years. And by combining all of these forces, Rosen will be a global opportunity factory and a real scenario for compliant stablecoins adoption and a new global economy. So I think this is why we are so passionate about what we're doing here. And I'm gonna show you a.
Hi guys, it's good to see you. I'm Emmanuel. I am a Rosen ambassador, and I've enjoyed a whole lot, benefited a whole lot from Rosen. Rosen is a platform, social platform that helps you to communicate. You communicate with friends all over the world. You don't need to be like, for example, I'm from Nigeria, and I have friends in China. I have friends in Australia. I have friends in different places. I have friends in Venezuela. Yes, and I communicate with these people without any problem. Rosen makes this possible. I get to communicate freely. I enjoy on Rosen, and you make people come join Rosen because of not what you feel is it's okay, but because Rosen is solving a problem. Now, Rosen is not just a social platform that you go there to chat like Facebook, Instagram, and or X, but Rosen makes it possible that you can communicate with people from different places, different parts of the world, different time zones. I have benefited from that. You also earn on Rosen. Rosen has a lot of a lot of options for you to earn. These activities make it possible for you to earn on Rosen. So why are you not on Rosen? Why are you not on Rosen? Like, why?
Okay, Emma actually is our early users on Rosen app, and we invite him to be our ambassador in Nigeria to onboard more users and help them in his country to build the communities here. But the most important thing is like there are another over 34,000 Emma stories happen on the Rosen in over 100 countries. So this is what we call like money-making movements on Rosen. What we are doing something different, like compared to other payment method based on the stablecoin, is that we are target on those income generation. It's not only for the remittance or like for the cross-border payments, but more like to create a new scenario that everybody can benefit from that. So if you want to know more, you can just download the app from the App Store and Google Play Store. The App Store make sure like everything on the Rosen app is totally safe. And I think some people are also asking like how we can make sure this kind of payments method is safe for you or is compliant to you. So I think the first thing is like the App Store review can make sure like the data here or the codes or system here are totally safe to you. And I just want to say that the new economy is inevitable, from the local to global, from absent to anytime, anywhere, and this is what we're doing here. And also we want to empower those like SMBs or startups to give them a direct and convenient and high efficient way to connect those global talents, connect to those global like labor markets. And Rosen is to be the future infrastructure for connecting human talents to the global value. And there's a big internet giants, these tech companies, they also trust us. And I was really glad to share with you, like we are the partners of the Alibaba's AI Accelerator and PayPal, Google, and Circle. And also we are really honored to be the winner and the official ambassadors of the 10 by 1000 this year. It is only possible on Rosen. And just to talking about some like a background about the technology side, I think in the past like decades, the global economic participation definitely is a privilege, right? You need to have some like learning background, or you need to have some like language skill or fintech access that you can be a international person or global person. But right now, use the AI and the stablecoin technology, you can change everything. The big shift make the truly borderless economy possible for everyone and everywhere. So we should definitely embrace such a great, shift in this era. And meanwhile, we are do our commitment to contributing to the UN SDGs here. I think the stablecoins is definitely a technology for good. So we are trying to use this kind of technology to do the no poverty, decent work, and reduce the inequalities. This is something we are always like, see that kind of real stories from over 150 countries, and you will see our users are spontaneously talking about like how they get the benefits from the Rosen, from the stablecoin economy. And I definitely would love to have you to build the future with us. And I really appreciate that. Thanks again, like 10 by 1000, even ECE and Africa FinTech Network, that to invite me to share like what we see here in this market and how we can empower the Africa's social economy by this stablecoin or crypto, this frontier technology, and how to build a truly inclusive digital future. If you are interested in what we're doing here, feel free to connect with us. I think we will have a record of this live streaming later, so you don't need to worry about that. You will have the deck, and we are always open to share what we're building here and what we're supporting. We're for the people, right? We are for the real people. So yeah, we are just trying to unlock a new lifestyle for the next era, for the Gen Z, for the digital native. Thank you.
Thank you, Seda, for these fascinating insights into stablecoin commercialization and the impact you're having in the Africa's gig economy. Now it's time to bring all of our voices together. We've received a number of questions from our audience, which have been summarized into 4 key questions. And so we'll now open the floor for this live Q&A. I will ask all speakers to come back on the virtual floor. If you can put your video back on. Thank you. Okay, so we'll start with, let me just bring this up here. This might be a question more targeted to you, Dominic, but of course, Abdallah and Sida, if you feel that you would like to add on any comment, any add-on to that, feel free to come in. So the first question is, how can African governments and bodies like UNECA develop harmonized regulations that balance blockchain innovation for low-cost payments, remittances, with IFF, AML, CFT risk mitigation, What policies address regulatory uncertainty, digital gaps, and bank reluctance as key non-financial barriers?
Hello, that sounds like a handful. I was not writing the question, but offhand, I think our central banks, I don't know, especially around Southern and Central Africa, they have a body where they actually meet to discuss issues on how we are going to progress, say, in whatever it is that they're doing. So there's a place where they do meet to discuss issues. It's at those forums where our countries or the other countries which are lagging behind should learn from the ones who are already ahead of the pack on what is actually happening. And we know we have common problems, because obviously if I'm remitting funds here which have issues, obviously they're going to end up maybe in South Africa or another country. So we definitely have to come together and see how do we have anti-money laundering policies which are universal to all our countries, so that we are able to combat the same problems which we are going to face. We cannot afford to be isolated, like one country is lukewarm on the regulations and the other countries are serious, because then we will not be able to achieve that which we are set out to do, because definitely regulations are a necessity in this new industry, and those regulations should be uniform. I don't want to move from here going to another country with my crypto and I'm facing new challenges there because we are differing in the way we handle these regulations. Maybe someone could add up something on that.
Yeah, if I may jump in, Benazir, I think I agree with what Dominic said, and to add to that, I mean, to start off, AML is not a crypto-specific problem. It's a problem that's always existed. FATF has taken steps to address that on a non-crypto basis, but also on a crypto basis, there's been a lot of harmonization that's existed. Now, obviously, there's always room for more harmonization to streamline processes. But the first step of any successful harmonization is an intention by the regulators to regulate. The more we see from that, and Dominic touched on this in his presentation, if the goal is to protect consumers, if the goal is to safeguard against these things, if there are no local regulations, then enforcement is impossible, and then retail is forced to go to sort of non-localized exchanges, and this is where the risk really arises. When there's an intention to regulate, we've seen this play out. We've gotten to a point where there's harmonization on two key things, which is AML and cybersecurity. Obviously, all regulators will still want to have some room to be able to encourage innovation. There will always be a level of regulatory arbitrage where we will see regulators want to attract talent to their markets, and that's fine. But as long as there's an agreement on AML and and cybersecurity, that goes a long way. And quite frankly, when it comes to on-chain processes, AML on-chain and KYCs on-chain are actually a lot easier. On-chain analytics mean we can actually track every payment from start to finish, as opposed to, I mean, if I ask any regulator right now how many $100 bills are circulating in the economy, it's probably a tough question for them to answer. But with the on-chain analytics, they'll have a better idea of how much USD-backed stable coins, for example, are circulating in their economy.
Here, Abdullah, I don't know, Sida, if you would like to add on to that before we take on maybe one more question.
Yeah, I think I just briefly like express my understanding is like because we actually working with the PayPal for the PYUSD, so they have the KYC totally the full loop of the KYC and on-chain activities on the PayPal, but only for the US version so far. But they mentioned they will expand to more countries recently. But I think if there's some like a future, maybe we can integrate with those like existing banks or like the fintech payment solutions with their KYC data already. It's gonna be easier to do that. But this is definitely not only for the regulations problem. This is could be a little bit like technical, and also how to emerge different database and whatever. So it's like a long journey to take. But I definitely believe there will be some days that we can achieve that one.
Thank you for that. Now, the second biggest theme that come up across the questions was around CBDCs versus cryptocurrencies. So I will try to merge two questions here and make it as simple as possible. With CBDCs emerging, do cryptocurrencies retain strategic value in Africa? Which is the first part of the question. And how do they compare for IFF risks? And is issuing USD-backed stablecoins viable for small trade-dependent nations? Maybe we'll go to you here, Abdullah, if you would like to take on that question.
Yeah, of course. CBDCs by their nature are not meant to achieve exactly what cryptocurrencies achieve. CBDCs are meant to be an on-chain representation of local currencies. So in the sense that they do create efficiencies around local currencies, but when it comes to what cryptocurrencies can do from a global perspective, from fungibility across markets, and I'm looking at stablecoins in specific, to be honest, which are not exactly unbacked crypto assets, but backed crypto assets, that's not something that CBDCs can achieve efficiently, especially when they're pegged to a local currency. So they are integral because they allow a huge swath of society to come on chain, and they help a lot with the on-ramping, off-ramping. So at Ripple, we encourage any investment into CBDCs, but I don't think they will be able to achieve the same efficiencies that you will get out of, let's say, stable coins. And that brings us to the second part of the question on USD-backed stable coins and trade. Regardless of how we feel about dollarization, 90% or something like 80% of all global trade is still, to a certain extent, tied to US dollars. And this is where stable coins become more and more integral. And mainly because for somewhere like Africa, where let's say an exporter importer has less access to dollars, they'll be able to trade more efficiently through stable coins without having to worry about where to get the dollars from in order to pay the vendor in Milwaukee, for example. And this is where we see more efficiencies rising as we sort of tokenize a bill of lading down the line, for example, then we'll be able to do more and more with stable coins. So yes, CBDCs, very important. Do they sort of work against cryptocurrencies or stablecoins? No, they work with cryptocurrencies and stablecoins and enable their success.
Thank you for this, Abdallah. Maybe one last question. I will go to you, Sida, here, which might be more adapted to you. There's been a number of questions as well on scalable use cases. Where are proven scalable blockchain applications delivering impact in emerging markets? And how can we address skepticism about overhyped potential? If you would
Yes.
like to take on this question.
Yeah, sure. So I think, yeah, definitely based on my previous presentation, I just mentioned like how we can use such a like income generation application to onboard more users to use the stablecoin in that real scenarios. This is definitely for good. But like if there's any like scams or if there are any bad behaviors on chain or they utilize such a stablecoin to like even scale their like bad business, how we can prevent that, or maybe there's some like overhyped projects or they want to use kind of this kind of technology to like bring some like scams or like on-chain for the financial sectors. So I think for our application so far, like we have the report system. This is also under the App Store review. This is the best way to like monitor the people's, like it's not only about the monitor the on-chain data, but it's also monitor their normal behavior in their chat box. So I think we cannot prevent any people to use the technology to do the bad things. This is like a just like a human nature. Some people will lie, some people will do scams. But the thing is like if we can enhance the whole system and make more people to join to monitor their activities, not only on chain but also off chain, then we can do a better like ecosystem. But so far the thing is like if there's not enough regulations, or if there's not enough like system to monitor all of these transactions, these sometimes happen. So I think the best way is to get more people to join this industry. And I think we are in the very early stage of this industry. So you will see a lot of the bad behaviors here, and ask people like how we can prevent that. I think the industry will evolve, and will definitely find the best way to build a better place for the people who are really want to doing something real. And for our platform, since we are focusing on those micro earners and micro payments, so usually you won't see those money laundering things happen on our platform, because it's too complicated to them to laundering the money like with like $1 or $2. So if I think the platform like Josen, if they can evolve, they can scale up, it also can prevent a lot of people, because you will have your own identity on this new platform as well.
Thank you, Sida. That was a very enlightening response. I don't know, Dominic or Abdel, if you want to add on to that.
Benazir, I would love to add something on CBDCs. I think the initial idea of cryptocurrencies was decentralization, the control part, because CBDCs means the government can just decide to shut you off, and you or your money, you have no access to it. And so that is the original idea. So if we go back to central bank, the CBDCs, it's like the control really goes back to the government, which was ideally why did people create cryptocurrencies. That was part of the issue they wanted to solve. So CBDCs, in a way, much as they operate on the blockchain, some of them, they can definitely not be compared to cryptocurrencies. That part I just wanted to clarify.
Thank you for adding this clarification. And on this note, I think that brings us to the close of our Q&A and to our event. Thank you all for your thoughtful questions, and to our speakers here for their candid responses. We've been hearing about the promise of blockchain, the power of crypto, and the importance of smart, inclusive regulation. But above all, we've heard that Africa is not waiting for the future. And to wrap up tonight's webinar, I would like to call on to Dr. Patrick Conte, the CEO of the Africa Fintech Network, to share some of his reflections on what we discussed today and on the closing remarks. Dr. Patrick, the floor is yours.
Hi all. Good morning from my end, and thank you so much, my listening. Great insights. I just wanted to share on one of the questions raised, the role of government and institutions like the ECA. I think that role is profound. If Africa has to leapfrog and gain the potential benefits of digitization, especially in fintech, government's role or political will is very critical. Let's look at the example here in the US. Give credit to President Donald Trump. Here is a president who, by his singular efforts, the Genius Act came into existence just a couple of months back. And in fact, he gave an executive order for US to start building up what? A reserve in Bitcoins. For us at the network, that demonstrated political commitment at the highest level. And that is what Africa needs. Fintech or digital finance, it's not the exclusive domain of central bankers or just the fintech, the innovators. It should be at the front burner of politics. If Africa has to address the huge exclusion gap that has been articulated since this morning, politics must look and take a dominant role in the way finance is offered in Africa. So government has a profound role, and having been at the network, we don't see that happening. We can single out countries like Rwanda, where I've personally seen President Kagame sits on a stage discussing digital finance in a fintech forum. We can single out the president in Zambia. We can single out the outgoing president in Ghana. But these are all, as far as I know, they're a handful. So politicians must take a dominant, if not a dominant, they must provide that leadership for Africa's digital finance ecosystem to transform. So it's profound. For me, that's the message. Government has to take leadership, has to drive the agenda. Because one of the questions that came up, again, is the fragmentation of Africa. That's the problem. We are fragmented by geographies, by languages, by markets, by policies, by regulations, by access to capital. That is why digital finance is slow to scale in Africa. And the only way we can address fragmentation is where there is political leadership. Hence, you have a role for the ECA, the African Union. So at the network, for the last 6 to 8 months, one of the initiatives we have been championing is what we call Fintech License Passporting, whereby if a fintech is licensed in Egypt, almost invariably should be able to operate in Tunisia, in Morocco, in Nigeria, in Accra. We know it's a tall order, but that is what is happening in the European Union. That is what is happening in the US. If you're a payment provider in EU, you are licensed in Italy, you operate in the UK, you operate in Germany, you operate in Spain. Why not Africa? If you are licensed in Texas, you operate in New York. Why not Africa? This is the challenge. So fragmentation is our problem. So this is the agenda. Until we can address fragmentation as a continent, the fact is access to finance digitally will remain a problem. I mean, the opportunities offered by blockchain technology, digital asset that has been discussed are profound. But until fragmentation is addressed, it's a problem. So that's, for me, that's the issue. And cash is still a dominant force in Africa. The competition is against cash. We have digitized. Africa can now boast of 9 fintech unicorns, but cash is still prevalent. Over 80% of transactions, as at last count, are done by cash. So the opportunities are there. So the takeaway for all of us here as Africans is that collectively, we must address fragmentation. Collectively, we must address issues around policy fragmentation, laws fragmentation, market fragmentation. Join us at the network. This is what we are doing. We are a convening voice for the fintech ecosystem. We operate across 48 to 50 countries. The singular idea we champion is that African market must be a singular market for digital finance to thrive. So stakeholders must collaborate, regulators must collaborate, and the innovators must collaborate. So this webinar speaks to that. Part of our convening agenda is to bring partners to share knowledge. I have learned a lot as well sitting here. There is a lot all of us are learning. So this is the only way we can develop the digital finance landscape in Africa. We have to work together. With those remarks, I would like to thank speakers. Your insights were powerful. I learned a lot, both across what's happening across different jurisdictions and what is happening at institutional level. I would like to thank our partners at the ECA. They've been behind the network since our formation over 7 years ago, 10 by 1,000 for leading this effort. Stay tuned because these are different series we bring across the ecosystem. In August, we brought the Fintech License Passports in, virtual town hall. We had speakers across the continent. So I would like to thank all of you speakers. Moderator, you did a great job. Thank you all and have a good day.
Thank you, Patrick. If I may just ask you all to stay on screen with your video on, as we will be taking a screenshot for the record of this event. Sydney or Berta, if you can let us know if it's good on your side. Okay, we're good. Thank you for staying on, and thank you again, everyone, for attending. Goodbye.
Thank you. Yeah.
Bye.